I currently have Grab to be a breakout stock on my system, with it giving a score of 1.15. It is a stock with a lot of potential at the moment and has a lot of people talking about it. In this video, I'm going to give you a brief overview of what Grab do, why they might be worth your investment, and where exactly we can expect this stock to head in the next few months. So currently on X, Grab has quite the momentum behind it, with many people saying how they're buying into Grab today. As we can see that on a day chart, Grab is now up around about, when it says 7.76%, and on a week it is up 11.19% currently. Grab is currently not in profit, hence the negative earnings per share and lack of PE ratio. However, we can see that Grab does actually boast a positive free cash flow on the trailing 12 months, as we can see on a quarterly basis that they started to take in positive free cash flow around about June. But we will get onto their financials later on in this video in the technical analysis, along with their intrinsic value. So what is the basics for Grab? Who are they? Well, they are a limited Singapore-based technology company that offers a super app providing ride-hailing, food delivery and digital payment services across Southeast Asia. The company's strong performance can be attributed to its strategic initiatives, such as introducing more affordable ride-hailing options to attract price-sensitive customers and promoting higher margin premium services. In the third quarter of 2024, Grab reported a revenue of $716 million, surpassing estimates with a 16% increase. So why do investors find this stock appealing? Well, Grab stock is appealing due to its dominant position in the Southeast Asian market. Diversified services offerings definitely lends a hand to Grab, and of course its consistent financial growth definitely plays a large factor for them. So now we are on one of my many systems. This is where we will do the technical analysis for Grab. And to start this off, we are going to be looking at the liquidity ratio. And here we can see that this is quite exceptional, with the current liquidity ratio being at 17.2, this being increasing quarter over quarter recently. You ideally want to see a liquidity ratio at around 1 for it to be around at least 6.2 in the last 5 quarters. We can see that this is just quite exceptional. Furthermore, trend lines are projecting this to only increase with time. Now, if we look at the retention rate, we can see that the retention for Grab isn't ideal. This is still relatively low. But for a company founded in 2021, it is hard to critique this too harshly, as we are seeing them break into profit every other quarter, which is a good sign for the future going forth. Furthermore, the trend lines are only projecting this to increase over time. If we now look at the free cash flow here, we can see that this is looking good, as they are now taking in free cash flow. Again, trend lines are actually projecting this to decrease, but overall we can expect the difference is to decrease, sorry, I should point out, with the free cash flow and operating cash flow only projected to increase. Now, when we look on an exponential chart looking at the trend lines here, we can see that the volume is increasing with the price, which is a good sign. It means that the current price has a level of support. And when we look on a 91-day basis, we can see that despite the price actually decreasing, the volume decreased with it, which again just shows that the money is moving in a sustainable pattern within this stock. So what are the quick figures for this stock? Well, they have a 52-week high of 5.72 and a low of 2.98. Sorry, this is a difference of 2.74, and they have a market cap of $21 billion currently. And the beta is at 0.9. So now we are going to look at the free cash flow for this company. Before we do this, I'd just like to say where I got this data from. So I've taken the surprise data here, but I have actually reduced this 800 as it is unrealistic going forth for this company. I put it at 120, and the growth rate here is at 267, which you can see just here. So when we put all of this together along with some other metrics, we get an intrinsic value on the left bullish formula here of $15 with a margin of safety of 25%. This gives you an acceptable buy price at 11, which is obviously way above where we currently are, putting this at a strong buy. And on the right bearish formula, we are still priced in at a buy, with the intrinsic value being set at 7.5 and the acceptable buy price at 5.6, which is just barely where we currently are. If we go in the middle of these two, we get an intrinsic value of $11 per share and an acceptable buy price of 8.47. So it's clear that this is currently a very good time to be buying into this stock for this next year's intrinsic growth. Of course, it does look like this stock seems to be overvalued at the moment when you look at it at face value, but when you do a deep analysis like this, we can see that this stock is currently heavily undervalued. When I do a discounted free cash flow analysis of this stock, we see that the discounted price per share is currently at $321,000. That is obviously just not realistic, and this is due to the fact that their free cash flow has only just recently taken into profitability, and so therefore it just basically makes the numbers look silly. So for that reason, completely ignore this. I mean, if you want to take this into account, then feel free to. You might be like a trillionaire one day if you put money into the stock and it does actually reach that. So let's see what the analysts are currently saying for this stock. So looking on MSN here, we can see that there is a price projection over the next 90 days of a high of $5.90 and a low of $4. When we scroll down here, we can see that based off of 27 analysts, we can see that Grab is currently priced in at a buy, and this has 18 at a strong buy and none actually at a sell, 6 at a hold and 3 at a buy. We can see a price target at a high of $8 and a low of $4.65. So it's very clear that analysts are very bullish on Grab stock, even though at face value it looks overvalued, but of course when you go in depth it isn't. So is it a good time to buy this stock? Well, looking on the 15-minute chart, of course it is Tuesday today. As of recording this, we have seen a massive hike in the price of this stock. Hence why my system called it as a breakout, and we can see on the MACD indicator we are in a long position. Furthermore, on the 15-minute chart we can see that we are above all of the trend lines, and on the RSI currently we are fairly bought. If we move over to a day chart, we can see that we are above all of the trend lines currently, which is a very bullish indication, and on the MACD indicator we can see that we have now just opened into a long position. So this could suggest that the next couple of months for this stock will be very bullish. I think it's fair to say that right now could potentially be a very good time to buy into Grab stock, and long term this stock looks massively undervalued at the moment on the intrinsic analysis, so there is definitely room for intrinsic growth alone. I think at this price you are getting a really good deal on Grab, and this stock could be the next Palantir, for example. Obviously it's got a long way to go before it does that, as it's still hardly in profit, so it will be a stock to watch, but this could definitely jump up massively over the next couple of years for sure. So I'm going to end this video here. I hope you have enjoyed it. I'm not a financial advisor. None of this is financial advice. It's just my own personal opinion. You should always do your own research before investing into a stock. If you have enjoyed this video, please do hit that like button and subscribe. I'm not selling any sort of course or anything. I'm not that sort of guy. But if you could, please help out by liking and subscribing. It would be greatly appreciated. With that being said, I hope you have enjoyed this video, and I will see you for the next one.